Mark Cuban, Dave Portnoy, Jordan Belfort, and Mr. Wonderful, all in news interviews today, February 2nd. It's the newest news you can get, guys. What's up, guys? Thanks for joining. If you've been here before, welcome back. If you haven't been here before, welcome in, and let's get right to it. I've been covering all the most recent news coverage I can find regarding the stock market and trade. I have four heavy hitters lined up. That's Kevin O'Leary, Mark Cuban, Jordan Belfort, and Mr. Wonderful, all giving their 2 cents about what's going on in the stock market and where it's going to go. So enough said by me. Let's get right to it. The timestamps are below in the comments. You know how to get there. And if you like content like this, please hit the subscribe button and the notification button if you want to know every time I make a new video. And, happy investments.
GameStop shares fell more than 30% today. Trading was halted briefly. Now, it's still up more than 1,000% from a month ago. And we'll have to see. It moves very quickly, it can move a lot. We'll see. Robinhood, the trading app platform that we had the guy on last week, they are continuing to limit how much of the stock people can buy. Now, the reason why, certainly an outrage, right? You got a mixture of passion and fights over profits. But look, it has to be that Robinhood had liquidity issues. I know the guy said here he didn't, that he had enough money, it was okay. It can't be true. And we're going to have to see what regulators say. But there are bigger questions emerging about how this is going to end. Now, one guy who is absolutely putting his money where his mouth is, or really, he put his money there first, so he's putting his mouth where his money has been, is the founder of Barstool Sports, Dave Portnoy. Good to have you on the show.
Thanks for having me.
Why is this resonating way beyond a business story?
It's beyond business because this story went viral. The GameStop stock went viral, and the others around AMC. So everyday people were investing in it. It wasn't just Wall Street. It wasn't even just day traders. This hit the general public. We were getting emails from people who have nothing to do with the stock market were investing money to get on this trend, and then right when they got on it, it's when it plummeted because Robinhood stopped it. So a lot of people lost a lot of money, and people who weren't used to being in the stock market, and people who I guess weren't expecting it go down that way. So it became a much bigger story because it involved everybody, not just traders.
Let's talk about the good guys and the bad guys here. I saw you on another program. You were heated up. You were talking about the anger towards the elites and the big shots and the Wall Street types. And that is catchy. People are angry. And I watched now on these chat rooms, a lot of followers of yours, that's working for them. What is your message about the anger and people going and investing in big groups to fight off the elites? What is the message there?
Well, I mean, my main message has not changed, and I've heard what everybody said, and I saw the interview you had with Vlad, and I saw the interview he had with Elon the other night, and his tune has changed. He went from saying not validity, no outside pressure, to, now it was a liquidity issue and the $3 million.
There had to be a liquidity issue. It had to be. It had to be that he couldn't make the call on covering the margin accounts, and he didn't have the bandwidth, he didn't have the personnel, and he decided to play it safe. But nobody told him to do it. He wasn't forced to do it. So that was always going to be his problem. But it's how it resonated. Speak to that.
Yeah, well, he should have said that in the beginning, but It makes it seem like he wasn't telling the truth in the beginning. And the facts of the matter is, anybody who looks at the people involved, you have the Melvin Capital, you have, the Citadel, you have Steve Cohen. Anybody, when you look and connect dots, if you are a rationally thinking human being, you think, I got screwed. And you think the little guy got screwed. And if it was reverse, and the big guy and the hedge funds were making billions, nobody presses the pause button. That's what everybody thinks. That's what I think. And that's what I still think, because it's just rationally how you expect it. Nobody's protecting. I've never heard, the big guys are making too much money too quickly, so we got to stop. I also still haven't been answered why, when you said you couldn't buy the stock, or are you allowed to sell it? What I read in the interview and heard with Elon is Vlad said, well, people get very angry and upset if they have to hold the stock and you can't sell it. Well, what do you think they're going to do when you cratered it? So there's a lot of things to me that still just don't add up.
Right.
And again, if you're using logic and reason, they'll never add up.
Now, here's my concern. You have a lot of followers, and I think it's good that you've put money into a fund that people can see online that you're donating to small businesses. I think you put up like 400, 500 grand, and now it's at like 34 million when I checked before the show. Good to help small businesses. They follow you. You take a hit. You've taken them before. You know the risk. You've got the capital behind you. You can take a big hit. A lot of these people are putting a lot of money that they need on the line. Are you worried about them?
No, because here's the thing. Everybody knows the risk. When you say things like that, and I've heard it many times, we're treating these people like infants. I mean, it's very straightforward that there's a stock market can go up and down. What is different here? And I didn't know this, to be honest, either. I didn't know that you could stop trading like how they did. I don't think anybody knew that you could do that. So for a lot of people, the rules changed. We're fine doing risk. We're fine putting the money in, but we think we're playing under a set of rules that exist one way. And in reality, they didn't. We didn't know that. I didn't know that. But as far as people risking their money, I've been doing this almost for a year, and I've heard every old school trader and old Wall Street say is going to end in a tear of in tears, and you're leading these people to doom. Facts are, we've been more right than anybody else. So, it's a risk. You have to know. And I always say, same breath, don't put in more than you can lose. Never do that. That's rule one of trading, gambling, investing, anything.
But it's intoxicating, right? I mean, that's when it gets risky, is that it seems like it's going up. Look where the stock is right now. We both know there's no argument on the fundamentals. There's not even any rational PE ratio argument to be made. What happens when it comes down if the investors that you're rallying up don't have the timing or the wherewithal to get out before the big guys can?
Well, yeah, and that's exactly what happened because they pressed pause. But the rally's already coming. When it comes to my attention, it's already coming. And the internet is a new age where everybody already hears this stuff. But I have just a different fundamental belief. It's not my job. I can say my opinion, and I believe the people listening to me have brains that work and can decide what they want to do with their own money.
Dave, you're persuasive. When people talk about you, you're not just another guy mouthing off. They listen to you. They believe in what you're telling them. You're giving them a sense of cause. I'm not saying this as a criticism. I'm offering it as a word of caution because they are going on what you say, and in a way, that's what you should want. But you know that they're playing with pros out there now, and somebody's going to lose because this stock can't stay where it is.
Well, it only didn't stay where it is because there was devious behavior involved. I think it would have. But again, as me, if you look at my profile on Twitter, the number one thing it says, I'm not an advisor, don't take anything. I'm pretty clear with that. But if people want to follow what I'm doing, if I wake up and I see a deer outside my door and I say, I'm going to buy John Deere because I saw a deer and I think it's a sign, and somebody wants to jump in on that, well, then you're a moron if that's truly why you believe that's going up. I believe people are smarter and can make decisions for themselves.
Look, I always hope you're right. I always bet on people. Let me ask you something. What are you doing right now? Are you staying in those stocks? Did you make this move to silver that was all over the chat boards?
I didn't do silver. I still have the others. I actually said today, I think I'm paying the highest price just to make memes. I like saying I'm holding it. It's going to the moon. And meanwhile, it's going down and I don't know what's going on. But if you watch the stream, I openly say that. So I still have AMC. I still have Nokia. I've gotten killed on those. I've gotten absolutely murdered.
So why do you have them?
Because I'm not going to get rid of them. I like being part of the movement right now, and I like making memes about it.
All right. Well, you can do that. Not everybody can. Dave Portnoy, thank you for tracking this story with us. I appreciate it.
Thanks.
What do you actually own when you own a share of stock in Apple? Well, Apple pays a dividend in a non-dividend paying share stock. What rights do you have as a shareholder when you own a share of a company that doesn't pay a dividend? If that company has a lot of discounted cash flow, are they actually, and they don't pay dividends, and they're not growing, and they're not investing, maybe they buy some shares of stock back. Maybe they issue more options for their executives. But what do you truly own? There was a point in time, back in the day when you owned a share of stock, you felt like you were an owner of the company. Now they have multiple classes of stock. You don't really own anything. What you own is the right to sell it to somebody else. It is effectively a digital representation of a share of stock that gives you the right to sell it or to buy it from somebody else. And it's
so you're saying that changes in. All right. So you're saying the changes in ownership structure. I mean, you're not no longer a shareholder. You just hold a trading instrument. I mean, that's sort of a dark view of.
It's not a dark view at all. I mean,
look,
if you go back to my blog post from the early 2000s, I said the exact same thing, right? I haven't changed my position in all these years. And supply and demand matters. Why do you think that, brokerages have analysts that go out and make calls and go out on CNBC and come on and talk about the calls that they've made and the things that they see happening? They want to create demand. I mean, the reality is they shouldn't. If it was truly about ownership in the company, no analyst should go out there and say anything because you want the stock to stay as low as possible so you can own more, right? It's just.
I mean, whether you're a Reddit trader or an institutional trader, you crave research, Mark, and that's what the banks sell. That's what analysts sell. There's value in that.
No, I'm not saying there's not value in it, but I'm saying if I'm a client of your research firm and I pay you for that, great. But when you go on CNBC and talk up your book, you're saying, okay, I'm creating more demand to create an exit or just to inflate the price. When in reality, if you truly were an owner and you had additional capital, you'd want that price to be as low as possible because you want to own as much of the company as possible. That's what Warren Buffett. That's the Graham and Dodd approach. Keep that price down because it's undervalued, so I can buy more. But that's not what happens. We go out and we get long and we get loud because everybody wants that price to go up because that gives them an outlet to sell it. And I just don't see any difference between that and what Wall Street Bets is doing. Now, I understand your point that an analyst, may have more training, more background, more, hopefully not more information, but at least be able to share that. And maybe somebody on a message board does not, and maybe they're just lying or pretending or whatever. I get the difference there. But at the same time, the goal is the same, to get long and get loud.
So, Mark, is there a world in which, GameStop can sustain a $20 billion plus valuation? And what is it then? Is it simply a store of value completely removed from fundamentals? Do you think that we're going to see that with some of these other names? And
it really comes down to, look, if somebody like Ryan Cohen, I don't know him at all, has had success with Chewy.com, and he put up a lot of his own money and bought 12, 13% of the company. Now, he's truly an owner, and owning that much stock, he put himself on the board and he put other individuals on the board, and he invested in a company that has about, 35% of its sales that are on e-commerce. And so they're doing all they can to get away from being a store-driven.
But, Mark, you're talking fundamentals here.
No, I am, right?
You're talking fundamentals,
but I'm telling you the difference. No, because you asked me about the future of the company itself, right? And so I told you there was a reason why somebody bought the stock, right, and invested, I don't know how much money that Ryan invested to actually take ownership in the company and to actually influence the operations of the company. That's one type of buyer and owner. That's great. If you can buy enough for the individual trader, it's just about the narrative, right? What's the narrative? Is Ryan doing a great job?
How do you justify that? I guess my original question is, how do you justify a $20 billion plus valuation? You're talking fundamentals, but when you're talking to the Wall Street Bets group, you're saying that it can keep going up and up again. What is that based on?
It's based off of supply and demand, like anything else. If you bring in enough buyers. So then my question, what is
GameStop? What is GameStop? Is it just a store of value at that point?
Yes, like any non-dividend paying stock, right? Look, the idea of having $1 trillion market cap in a company would have been laughable 5 years ago, 10 years ago. The idea that a company's market cap would go, $1 trillion company's market cap would increase 50, 60%, or $600 billion and more than, almost any other S&P stock in months would seem incredible. We all would say the fundamentals could never support that, right? It's supply and demand. How many buyers and how much money is chasing? And now with low interest rates, there's so much money chasing. And dude, this is nothing new, right? It's just nothing new at all. And there was a time when if a company went from $100 million market cap to $700 million market cap because of all the supply and demand, and who knew where the demand came from, it was just, wow, that's crazy, but it is what it is. Now we're only questioning it because it came from a message board.
What is going on here exactly? Here to tell us, a man whose name has become a synonym for Wall Street's recklessness and corruption, but someone who's actually learned from his experiences and has interesting things to say about the moment we're in right now. He is Jordan Belfort, the original Wolf of Wall Street, and we're happy to have him on tonight. Jordan, thanks so much for coming on the show. So,
my pleasure.
You've participated in this from every possible angle. You've watched it for decades. What do you think is going on here with the Reddit guys?
Well, I think you hit it right on the head, and that was my thesis for tonight, was this is really a convergence of a few different things. Number one, finally, the little guy has the ability to fight back through a convergence of technology, the platforms for trading, the ability to communicate as a group. So in the past, you could have never done this before. So there are two types of short sellers in this world. There's legitimate ones that's a natural part of the market, and there's another part that are these hedge funds that gang up and literally will short a stock almost down to zero, out of business. They try to spread negative news. They'll start investigations. And that's what started with GameStop, massively overshorting the stock. And this, I think, as you said, connects to a far bigger thing than just trying to make a few bucks on a trade. This is about the end of the movie, The Big Short, where, like I said, all the bad guys went to jail. Ha, just kidding. No one went to jail. So I think everyone knows there's something really wrong in the pit of their stomach. You can silence people, you can deplatform people, you can break things with bleach spit and hammers and get away with it. Everyone knows whether you're on a Republican or Democrat, there's something wrong. That's why both sides of the aisle united on this one thing. You notice that both sides united because it was money sort of takes the politics out of it. So what happened here is these people, like if you actually dig into the boards like I did, because my first reaction was, oh, there's a pump and dump. But no, it's really not what's going on. If you actually look at the messages, these people are mad. They have something they want to prove. It's not really about money. I mean, they want to make some money here, but they are angry as hell, and they're sick and tired of getting stomped out by Wall Street, which they have been forever, and they finally now have at least some ammunition to get back. The danger is it's going to end badly for these stocks, and I hope people, don't lose money in the process.
I wonder, though, I mean, now that this has happened, everybody knows it's happened, and that the hedge funds and Wall Street itself are more vulnerable maybe than anyone imagined, and the internet still exists. I mean, what does this portend going forward? I mean, we can't kind of continue as we have, can we?
Sure. No, so one thing Wall Street and hedge funds are very good at is closing gaps and finding these sort of inefficiencies and closing them up. So what these people on Reddit, and my hat's off to them, by the way, it was brilliant what they did, is they found a real inefficiency in the market and a gap where something had been dramatically overshorted and they could actually, get enough buying power. They did that. Wall Street now knows that. So I would be very shocked if hedge funds would create another situation so quickly where it was so overly shorted that it would be that easy for people to come in as a group and bring the stock back up and start a short squeeze. So that might end. But I believe this is a paradigm shift right now. The little guy finally is equipped. Information travels instantly now. You see, it used to be only the big guys. They paid the analysts. They had, all this stuff happened before the little guy. The big guys were colluding doing this stuff, right? So now the little guy finally has the ability to play that same game, at least somewhat, and there's going to be a radical change. It's not going to be the same.
So I know you've had an exotic and famously wild personal life. That was so much more interesting and insightful than anything I've heard on any other channel about what we're seeing. And I'm grateful that you came on tonight. Thank you. Jordan Belfort, good to see you.
Everybody had just completely discounted, thought it didn't matter. And the Robin Hood investors, we don't care about them. They're too young, they have no money. Well, that's not how it is. I can't stand the arrogance of sophisticated Wall Street investors. What a load of crap that is. Those guys just got blown up. Okay, going out for a cruise. Great time to talk about the economy. On your bike, why not? But before I go out into the sunshine here in Miami, I got to put on a little Listen, it's really important. I use the AM Ratish Hanley. Why? Because it's SPF 20. Keeps the dome from getting damaged. You don't want to damage the dome. The dome of desire has to stay in perfect shape. So a little AM, SPF 20, that's what I'm talking about. Yeah. Very nice. Then, of course, safety first. Got to put on the helmet here. Also, I'm a fashionista, so I want to look good. And then, of course, need some shades, because we're in Miami, right? That's what I'm talking about. All right, so you ready to cruise? Yeah. All right, we're going to take a cruise here. Let's go.
Hey, do you want to know how we built a $50 million coaching company with just one 45-minute presentation?
You think of, your basic company in America. Let's say 50% of its sales go through retail. I'm talking about consumer goods and services, which is about 65% of the economy. So 50% go through retailers like Walmart, Target, Bed Bath & Beyond, that kind of thing. And then you got about another 40% going through Amazon. That's how big Amazon's become. Now, when you sell it through a retailer like Walmart, you make about 50 cents on the dollar. You sell it through Amazon, you do a little better. You make about 60 cents on the dollar. However, you don't have the benefit of getting the customer's name. That's the big thing about Amazon. And then most companies have 10% from their own websites to consumers. Okay, you got that. Now, here's what happens. Retail shuts down last March. The companies that made it all did one thing very successfully. They basically went online. They set up their own websites. So they standardized on Shopify. Then they standardized on DocuSign. Then maybe for security, they standardized on CrowdStrike. Basically, they were using technologies like Wix.com to enhance their whole platform, their video, their product support, pictures, stories, animation, graphics, all that stuff. They were basically doing this because they wanted to entice people to buy direct from them. And those companies, they went up in value like crazy, even in the middle of a pandemic. Look at what happened to a Zoom stock or Shopify stock, you get it. But they were empowering America to go digital. That's exactly what was occurring. Now, think about it this way. Instead of selling something through Walmart or Target or Bed Bath & Beyond where you made 50 cents on the dollar, you're now shifting your sales direct to consumer where you make 100 cents on the dollar. So people say to me, why is the market exploding? Why is it going up in value? Well, the market senses a new America, a digital 2.0 America, an America where it's very productive and where a lot of products are being sold direct to consumers at very high gross margins. That is something brand new, really new, and very interesting. And so it's not just small companies, big companies are doing the same thing. Nike, 50% of its sales direct to consumer all around the world. This is a global phenomenon that's occurring. It's amazing what's happening. And as a result, we've accelerated the digitization of our economy. But while that was happening, something else was occurring that's incredibly cool too. Social media kept getting more and more powerful. Storytelling more and more powerful. Animation, graphics, video, you name it, became more and more important to any company who were trying to figure out how to tell their story. Something happened recently that really shocked everybody. You know, people keep talking about sophisticated investors on Wall Street and the little guy doesn't know what's going on. Not anymore. Here's what happened. You know, the crowd basically led by Reddit and Wall Street Bets, which everybody had just completely discounted and thought it didn't matter, and the Robinhood investors, we don't care about them, they're too young, they have no money. Well, that's not how it is. They ganged up and went after hedge funds who had done big short bets on companies like Start Engine and AMC and American Airlines. And guess what? They became the new force on Wall Street. The little guy crushed the hedge funds. It forced them to lose billions of dollars on their balance sheets as they were caught with their pants down as all these tiny players amassed together like a flock of swallows and became really powerful. Now who's the sophisticated investor on Wall Street? It's the little guy. And now if you're a guy that's shorting stocks or a hedge fund manager, think you're so sophisticated and using all the AI technology and black boxes and algorithms and all that crap, if you get targeted, you get screwed. And that's what's happening. The crowd roams at night looking for opportunities in the markets and strikes in the morning. And you see it happen every day. And it's a new force that's not going away. It's power to the people, baby, and I love it. I think it really democratizes the market. And you know what I really, really like about it more than anything else? financial literacy. It used to be, and you know, we've got 100 million Americans that do not have anything put aside for their retirement because they were never taught how to do that in high school. And everybody's saying, well, you know, we teach them sex education, geography, math, and reading. Yeah, we do all that. But why don't we teach them financial literacy? Well, along comes Robinhood, a platform where you can have $200 and invest it and start to learn the ways of the market and how to put money aside and how to invest and how to buy a stock and how to sell one. That's financial literacy. And millions and millions and millions of people started opening those accounts. And Wall Street never cared about them because they didn't want an account with $200 in it. They couldn't make any money off you. They want 100,000, 200,000 minimum. Well, Robinhood said, hey, for everybody else, we're your platform, and bingo, it becomes a massive force in the market. Incredible, also very good. So in a matter of just 36 months, 16 million plus accounts with power to change the market direction. Do I love this stuff? Oh yeah, I totally love it. I can't stand the arrogance of sophisticated Wall Street investors. What a load of crap that is. Those guys just got blown up. By who? 25-year-olds. How cool is that? You gotta just love that. So what's really going on is the democratization of the entire global stock market. You know, and the way to really make this fair for everybody, big or small, is total transparency. If you're short the stock and maybe make the rule 5% of the float, you got to post it, and then everybody that's cruising around looking for you is going to find you. It'll make you think twice before doing that. Good or bad, it's transparent. That's what matters. But the power of the little guy now has been proven. And the way you prove power on Wall Street is money. When you force a firm to lose billions of dollars, you've got power, baby. That's exactly what you've got. And that's exactly what happened. Millions of small guys ganged up on the big guys and wiped them out. I still get a kick out of it. I think it's just fantastic. This is really the power of social media and why we should protect it. It just shows you, it gives power to everybody. It's democracy, it's a voice. It's a chance to shine even if you're a single candle. That's what the whole deal is about. And together, it's a bright light. That's the whole deal right there. Let me give you some investing tips I've learned over the long period of time. It's very simple. You know what happens in the market when you get a crazy week like last week? When the market goes up 10%, down 10%, you never know when that's going to happen. So you have to stay invested all the time, because last year, during the crazy pandemic period, the majority of the returns came in just 19 days. You just didn't know which 19. So if you're trying to time the market by buying and selling in the ups and downs, it's really hard to make dough, really hard. There's nothing wrong with day trading, that's fun. But you got to take a portion of your profits and put them aside. Now, I was involved in an app called Beanstocks to help people do that. It's not day trading, it's long-term investing. But listen, you got to take a little powder, keep it dry. You take 10% of your profits every time you trade, stick it into Beanstocks, download it, check it out. I tell all the day traders, you guys have power, but you've got to take care of yourself long-term. Take 10% of your winnings, park them aside for yourself. Let it grow in the market over the time. Between now and 40 years from now when you retire, you'll have over $1 million if you just park $100 aside each week. Most day traders can handle that.
Whew, you guys made it through that. Congratulations, I'm proud of you. Now you're much more informed about what's going on in the stock market today. So, good job, happy investments, and I'll see you in the next one. Take care.